What's good, everybody? Welcome to another episode of Let's Argue About It. Today is a little different. As you can see, we are not on the couch. I got my brother, founding member of Cool Dad, Courtney Arceneaux, and his business partner, Hugh Arrington, right? Here to talk about GreenArc. So before we get into it, right, I want you to tell me a little bit about, your background, your financial leadership, and kind of what got you guys into building GreenArc.
So a little bit about me is, I'm born and raised in Houston, Texas. Grew up the son of a stand-up comedian and a high school math teacher.
Really?
So I feel like I got the best of both worlds from a personality perspective. So I like to look at myself as more of an extroverted math nerd. But with that, I graduated from Southwestern University in Georgetown, Texas, and spent the first 10 years of my career in business development and sales at American Express, and working with some of the business owners there. A lot of people that I was connecting with, they really had a fundamental misunderstanding of their business. Like one of the businesses that I remember working with, I was standing in this trailer in the middle of this huge mulch yard to where they had rocks and mulch everywhere. One of the things that I was talking to the business owner about was accepting American Express. And my job was pretty straightforward, just convince them to take the card.
Yeah.
But they were, convinced that, hey, we're taking Visa and MasterCard. We only need to take those because our rates are 1.8% and your 2.9% rate is just not going to work for us. So we're just not interested in taking the card. So one of the things that I asked them, I was like, hey, I can leave now, but if you'd indulge me for a minute, let me take a look at your merchant statements and, let me see if maybe there's a way that I can be of value to you, just out of my curiosity. So I asked them for the merchant statements, and then I pulled out my calculator. And this is before smartphones, so you're talking real buttons.
Okay.
So
my boy said he had a calculator on. So
you
you had a calculator in your pocket?
Exactly. I had a calculator on me, and I was just ready
crazy.
to, get the key in the way. But
that's different.
Yeah, so I pulled out the calculator, and I'm sitting there adding up all the fees on his merchant statement. So you got batch fees, you got transaction fees, you got monthly fees, and the number that I came up with was 3.2%. So what that means in his business is that, like I said, he was operating with a fundamental misunderstanding of his business that was costing him thousands of dollars a month.
Yeah, because he was saying, 1 point
Yeah,
percent.
he thought it was 1.8, but
it
was 3.2.
Right.
And American Express was 2.9. But at the same time, the American Express customer was going to bring a lot more value to him. So he ended up soon after, of course, he signed up in that moment when I was able to bring that clarity around the fees. And soon after that, he ended up signing some pretty large corporate clients and eventually opened up a second location.
Oh, wow.
So with that, that was something that really resonated with me because I walked into that trailer not really knowing what was going on with their business, but that was a moment that really changed both of our lives.
Okay.
Because based off of that interaction, I wanted to get a deeper understanding of how to help businesses like this on a larger scale. So I went back to school, got my MBA in finance from Tulane University. And then I made a pivot into finance, working with large brands like Hewlett Packard Enterprise, Amazon Pharmacy, and most recently at Roe, to where you probably seen the commercials on TV with Serena Williams and Charles Barkley.
She was a crib walking in those.
Yeah, exactly. So I helped build out their finance infrastructure to where they can get a lot more clarity around their decision making. And then from there, ended up connected with Courtney soon after that. And, we've been rocking ever since. So, with that, I'll just go ahead and lob it to him, and he can tell you a little bit more about himself.
Turn back to follow, brother.
How we've
I'm gonna keep
connected.
it.
Yeah.
I'm gonna get straight to the point.
Talk to me.
But no, my background, Courtney Arceneaux. I went to University of Houston downtown to get my undergrad in accounting. After graduating from there, I got into a mid-sized accounting firm doing financial audits. And so I was there for about 2 years, and then I got recruited from one of the big companies that I was auditing to come do what I was doing, in public accounting, more in industry for them. And so that was with a pipeline company. I was there for about 4.5 years before I wanted to get closer to decision making. And so being in, tax, accounting is already a back office function. Tax is typically what I call the closet. It's not even, it's behind back office. So it's tax was like one of the last things people thought about whenever they were making like business decisions. And so I wanted to get closer to the action of like making those business decisions. And so I was able to kind of pivot. There was an opportunity for me to join a corporate finance team at Houston Methodist Hospital, here in Houston. And so I joined that team, and that was when I was able to really get closer to like understanding how the executives were looking at data, making decisions, and decisions that really and truly impacted like the business and like how they were moving forward.
This is the data that you made for them.
Yeah, so I mean, once you get into like this corporate finance function, like you realize a lot of the analysis that you do, like the executives from CEOs, VPs, they all take this data and analysis and make like forward-looking decisions. And so that was the arena I wanted to get in. And so was given the opportunity, and so I did that. And one of my favorite like outcomes from that role actually was like watching the analysis I did kind of end up on like billboards for like the hospital.
Oh.
So one of the things they were looking for was like, and this is just an example, they were trying to understand which service line should we start marketing for people to come to Houston Methodist to have their, services performed. So I had to look at everything from like cardiology, just different service lines, and cancer treatment. And so just to kind of get to the point, I realized that cancer treatment was like the most profitable service line that they needed to start marketing if they wanted like the most bang for their buck as far as like what people need to come here for. And so, hand that over to like the marketing executive. And, shortly later, like a few years later, like I saw around the city come to Houston Methodist for your cancer treatment based on like the data analysis that I had done.
And that's crazy because I'm not even from Houston, but like I always know Houston as like not cancer city, it sounds bad, but like the place where you go if you have cancer because they're the number one like in America. So
And
it's crazy to talk about.
Yeah. And so seeing that, and that was also like I didn't even understand like what consulting was, and we were like essentially like internal consultants for the business. Then I had an opportunity, well, not an opportunity, I got recruited to go back into oil and gas, doing same type of corporate finance, what they call FP&A, financial planning and analysis. And so I went back into oil and gas company, and I was doing the same thing there. And I kept wanting to get closer and closer and closer to like decision making. So this was like operations. And so I realized a lot of people that were in this, operations, decision making kind of role, a lot of them went back to school to get their MBA. And so that's when I decided to follow the same route. And I went back and got into Rice University here in Houston. So I got my MBA from there. And then from there, I got recruited by Deloitte Consulting to join their strategy and analytics group. And so I was there for about a year and a half before getting laid off. And so just kind of like fast forward to like where we are now, you can call it, I don't know if it's an opportunity, but that door closing led to like these other doors opening. And then me realizing that I had a skill set, and same with Hugh, that we had a skill set that was, of course, it was obviously valuable in the companies we were working for, because the last oil and gas company I worked for, it was the largest private oil and gas company in America. And so I realized the stuff I was doing for them, it doesn't matter what size company you are, everybody needs this same level of insight and analysis and somebody like watching what moves to make next. But for like more small businesses, mid-sized businesses, they can't afford to pay 2 MBAs and maybe 3 other people to do this kind of work. So I realized there was a need in the market to be like, hey, I want to get in and I want to provide this level of analysis and insight to like people where impact is really going to be made. And so more background, like my father was an entrepreneur, my father-in-law is an entrepreneur, and I just hang around other entrepreneurs who are like always like doing something, but I realized that they don't have the financial leadership necessarily to like make better decisions because they can't afford to. And so that's how GreenArc came to be. So over a year ago, I was like, man, you know what? I want to take this corporate finance like skill set and make it affordable and accessible to people like yourselves, like my fathers, and Hugh. Like Hugh had started a business before too. And so a lot of times, when you can give people data and not just, because most entrepreneurs, especially early on, they make a lot of decisions based off of their gut feelings about something. But we're able to like take data and like either confirm or deny that gut feeling. Because sometimes your gut feelings are right, but you don't know why they're right.
Right.
The data tells you yes, you're right, or no, you're wrong. And so that's really like our aim. And also kind of getting to the meat of it, like we were always the only black dude in this space.
In every room.
In every room. And so what I wanted to do was I wanted to make, you know, as a business owner, whether black or brown business owner, I wanted to make the conversation about money and finances like approachable, because a lot of times people don't even approach the conversation for themselves because they feel like they're not equipped to even like talk the language or the lingo.
Yeah.
So one of the things we take pride in at GreenArc is taking this financial jargon and breaking it down to like basic like understanding. Because if you understand as a owner, like then when we have conversations, you understand exactly like where we trying to go.
Right.
Versus like me throwing jargon out and you don't understand the jargon, and so you just shut down and you just like, oh well, you just handle it.
Yeah.
And so just to kind of like bring it home, that was like my background and like why I got into this space and wanting to bring, you know, enterprise level strategic finance to small business owners and just kind of people that are have a growth mindset and are trying to just make better decisions about, you know, the finances of their business.
That's what's up, man. That's what's up. So again, right, GreenArc is a CFO services firm. What makes you different though from me just going and hiring an accountant to look at my books and be like, all right, bro, you're losing money here, you're making money here, don't do this, don't do that. Like, what makes you guys different?
That's a great question. So to give like the like a very like simple analogy, right? Just think of it like a car, right? So when you're driving a car, your rear view mirror, like that's your accountant or bookkeeper. They're always looking at what you've already passed, like what's already in the past. Then you have like, you know, your tax person. Once a year, you go to your tax person because you got to file your taxes. That's like your annual inspection. Every year, you got to make sure you're compliant, you're filing, you pay your fees. That's like your tax person. A CFO is like your GPS. You tell it where you're trying to go, and we tell you all the different routes to get there, which ones are the fastest, which one's a toll, which one's going to have a wreck on it. So we basically lay out exactly all the options you have to getting to the destination that you're trying to get to. And so in a very just simple way, that's how I would define like, you know, what we do as CFOs versus what a bookkeeper does or what, you know, your tax accountant does. Most of the work that they do is just kind of like looking at what's already happened and what's in the past. We look at where you're trying to go and like the best way to get there.
Okay.
Yeah, and just to add to that, when it comes down to us bridging that gap between accounting and strategy, oftentimes that starts with the model to where people can understand the impact or the financial impact of their assumptions. Because sometimes there is no data available because a company may be pre-revenue or they may just be getting started out and they don't really have a whole lot to go on as far as how the business is performing or will perform. So if you just have some ideas or assumptions of what you think might be happening in a business, I can model it out and help you understand the financial impact of that. So, you know, if a business can operationalize it, I can model it.
Yeah.
So that's one thing that we really take pride in is being able to, help those decisions come to life and bring that clarity to your decision making. Yeah. So a lot of times you can go into a situation and be like, oh yeah, we can sell this product sell product A, sell product B, and sell product C, but all the while you're not knowing that the bottom is leaking out of product C because you don't really understand what those unit economics look like. So we help bring that clarity to the forefront and say, hey, you probably need to stop selling this, or you need to find a way to get a better margin profile on this product if you're going to be scaling up, selling that. So that's the type of clarity that we really bring to the table.
So I get it, right? You speak on clarity, and that's great information. So I guess my next question is, you guys talk about how like 4 out of 5 businesses fail, right? Like on the average of the first year. So like, what is your guys' impact on that to prevent them from failing, right? Because I know you talk about tax preparers and accountants, they look at the past, right? And again, right, once you're a year in, like if you fail at a year in, the past doesn't really matter because you know you got a
Right.
business. So what are you guys doing? I mean, I get it. You guys are scaling and looking at different revenue streams and past, but like, how are you guys affecting that current state of like, hey, this is month number 3,
Yeah.
and we're gonna make sure that you make it to month number 9,
Yeah.
month number 12.
I would say that a lot of businesses fail because they run out of cash before they figure out how to make the business work or to make it a sustainable, viable business on an ongoing basis.
Okay.
So first step in any business is to stabilize cash flow. So like being able to understand, okay, how much are we have in payroll if you have employees, or how much of the cash is outgoing on a monthly basis, trying to understand what your burn rate is. So, okay, now that we understand that we're burning, just for example, $10K a month in expenses, how much cash do we have coming in relation to that? So,
And how fast is that cash coming in?
And how fast is that coming in? Because you may be generating sales, and you know whether you have a product or a service, and if you're sending out invoices, and these customers aren't necessarily paying these invoices for 30, 45, maybe even 60 days, then that can really impact the inflow of the cash to where you're running your business and you're like, hey, we're selling all this product, we're growing, we're doing this, but where's my cash? Where's my money?
Yeah.
How do I understand how to manage all of that? So we help bring that clarity to the forefront to where it's like, okay, if I'm burning 10K a month and then I'm bringing in, 20K a month, then I can kind of manage that accordingly and be able to take those profits that I'm generating and reinvest those back in the business, and then we can scale up from there. But until you have that clarity about not only the cash coming in, but how fast you're converting that revenue into cash, it's going to be a tough sled all the way up that hill.
Okay.
And just to add on what he said, like a lot of small businesses, and like we get it, right? Is that most people manage their business like from their bank account.
Yeah, facts.
So that means like
starting off too, right?
Starting off too, it's like, okay, I got X amount of dollars in the bank. This bill came in. Can I cover it in the bank? All right, cool. But they don't have there's no planning or analysis or forecasting that they're doing. And so like what we're able to provide is that clarity, like, oh, this is what your business is today. First of all, let's find out where you're making money, where you're not making money. Then if you're looking to like grow the business, that's where we have conversation about, okay, what does growth look like? Does this mean a new location? Does this mean personnel? Does this mean, just different inputs that, draw down on your cash? Do you really currently have the cash flow to, grow the company as you think you want to grow it? And then if you don't have the cash to grow it, then we can create a model to where now you can go to investors or stakeholders and be like, hey, this is our business today. This is where we think we can go if we get this type of funding or cash injection into the business, whether that's, investors taking out a loan. And again, we help you understand what those different options look like in regards to, do you give up equity to an investor who maybe wants to come in and own a piece of your company? Or do you go out and just take out debt so you keep all your ownership and you just pay back the loan?
Yeah.
So all these decisions, a lot of people don't even have like the slightest idea about what their options are when they're trying to make sure their money has enough cash to keep flowing, because cash is king. Like you can be rich on your P&L and then a poor cash company, meaning like you're not making no money. So we just help give those insights to business owners, founders, and just people that are trying to get better clarity. And we're going to keep coming back to that word. So we provide clarity. So that's what we do in a nutshell, is provide clarity to business owners or management teams looking to make better decisions for their business.
So here's my next question, right? So if for a person like myself, right? I had two trucking companies. I started with box trucks, right? Went into the Amazon thing. But one of my biggest things was like when I first started, you talk about this, you guys both talk about this, is that like you're operating out of the same bank account, right? So how does somebody, and we're not gonna talk prices, right? We're not talking prices. Whatever they price is. But what we talk about is how does somebody afford something like a CFO service, right? Because we're talking about this, and you guys are putting out a lot of good information right now, right?
Yeah.
People see this, they're like, oh man, that's something I need. But if you're just like a business starting off, and like you mentioned earlier, and I might be putting you on the spot because I know you mentioned earlier, you want to provide these services to people like us, myself, whatever. You know our cash flow is a little different than the typical cash flow, right?
Yeah.
So if you're starting with 20K, how do you guys help people work within that budget to still provide that clarity for somebody who's not necessarily $1 million client, but we're a 20K client? So what do you guys do to be able to kind of like fit within their scheme, but still be able to help them understand so they're not just wasting their time and their money on something that may not, like again, you want that clarity, like, hey, this is not where you want to go with your 20K, brother or sister.
Yeah, I would say there's a couple of different paths to engage with us. So we typically start off on either a project basis, and that would over time lead to a monthly retainer model.
Okay.
So in our project-based approach, we typically start with something like an accounting cleanup, to where someone may have been operational for however many months, but they're like, hey, we got QuickBooks, we got transactions going in there, but I don't know what that means. So we'll go in and we actually have CPAs that are part of our group that help us, to make sure all of our clients' financials are GAAP compliant, and we get that that cleanup done, and just make sure we have a solid foundation for which we're building our models and assumptions and forecasting on. Because just like any piece of software, any model that you build, any system that you are putting together, if it's garbage in, it's garbage out.
Yeah.
So that's one of the things that we make sure that we tackle first, is making sure that your books are in order, your transactions are mapped and tagged accordingly to where they're supposed to be on the P&L and on the balance sheet and on the cash flow statement. And then from there, we take all of that and then we put that together in a model. And then, then we can start modeling out different assumptions and scenario planning from there. But once we get that clarity, there are other times to where like that can evolve or graduate into a monthly retainer model, to where maybe you do need the CFO level support, but it's not necessarily on a one-off basis, because you need weekly cash flow monitoring, or you need a monthly review because you have investors now and you need to be reporting to your board, and you'll need to be able to kind of gather that financial story and then be able to deliver that to your investors on a recurring basis. So we're pretty flexible in how we approach clients, and we really want to meet you where you are. But overall, like, there are a couple of different paths that we start with typically, but it just really comes down to what the business needs.
Yeah, and so it's like, really we have like 3 primary type of clients that we work with. One is early stage founders, and these are people that are like what we say, like either pre-funded or like before they even like open the door to their business. So we have early stage founders, we have, profitable small businesses that are like, you're already operational. You're looking for like that next level of like insight and clarity. And then we have just flat out growth stage businesses. Like they already know where they're trying to go. They just don't know what it takes to get there. And so with the early stage founders, people that are like pre-revenue or pre-funded, and that's typically like project work, where we build them like a financial model that's 5 years out. It shows them all the different rounds of like capital they've gone out and gotten, and how they're going to deploy that capital over their 3 or 5 year horizon. Because if you're going to a bank and you're trying to open up an ice cream shop and you don't have the money, they're going to be like, okay, well, show me like what are your financial projections for this. So you have to be able to show them in a way that shows that you're a student of whatever it is you're trying to like open. Because what we talk about a lot is that, it's not a lack of good ideas out there. It's a lack of clarity around how that idea makes money. Because I don't care if you go to a bank, you go to a private investor, everybody wants to know, how and when will I get my money back? And so if you go and you just be like, well, yeah, I want to make cups, and you need $50,000 to make cups, they're going to say, okay, well, show me who the customer of these cups. How much are you selling the cups for? It's all these different levels of details that a lot of times people don't really think about and also communicate in a way that you can understand. Right. And so that's what we help. We sit down with the client and we say, okay, tell me what your business is. How do you make money? And once you understand like how they make money and then where they spend money, like Hugh said earlier, whatever you can operationalize, we can model it.
Okay.
So that now puts the power and the decision making back in your hands and be like, oh, I see what we're doing here. This is what we need to do next.
Yeah.
And so that's typically like the early stage founders. And then we get into the same type of work with companies that are already in business. They're just looking for like more understanding around like their numbers, man. Like you don't understand how many people are already operational, but couldn't tell you what their margins are, what their gross margins are, what really any KPI, any type of like financial metric is for them, because they're so busy like working in the business, they can't even like work on the business.
Yeah.
And so, and then that last one is just growth stage businesses that are, ready to take that next step, and they need more financial leadership, the kind that we provide, that just lays out everything that we said for them to take that to potential investors, or if sometimes you don't even need funding. You just need to know how do you take the money you generated that you are already profitable with and deploy it in the best way.
Yeah.
So that
reinvest it
exactly
back.
Okay. right.
And one thing to really call out is that, of course, the optimistic view is that we build you a model, you understand your assumptions, you'll have all this clarity, and you're going to grow up and to the right. Your revenue forecast is going to grow every year. But the harsh reality at times is that when we can build this model and bring this clarity to you, you may realize maybe this is not a good business to be in.
Right.
So it can really save you a lot of time.
Exactly.
And wasted money and effort and headache and heartache going into a business that really just isn't viable based off of what you are assuming about that business or about that market, because you could be out there selling $1 for 50 cents. And that's a fast path to going broke.
Going broke
So,
quick.
Yeah,
Going broke quick.
That's the type of clarity and really harsh conversations we can have with our clients and potential clients, and saying, hey, like maybe this won't work.
Yeah.
And and based off of every scenario that we planned out, then you might want to find a different path, or find a different business to get into. So, of course, we would rather that happen less often than it would, but that is one of the possibilities that can come out of that.
We try to help businesses make as few expensive mistakes as possible.
Okay.
That a lot of that is just boiling down to like, hey, this may be an expensive mistake, and a lot of times people just do that. Like if you don't have this financial leadership internally, you're building whatever you're building, and you're making a bunch of expensive mistakes that you could have avoided if you engage with somebody like us who can tell you, hey, this won't be good for the business. And so
I appreciate
that's
that.
all I would add, to what Hugh said.
No, that's good. So, right, talk to me about the playbook, right? I mean, I know it's not a basketball playbook because he can't guard me. But just talk to me a little bit about like the playbook, the financial, what you got, the series that you guys have going on right now. Because like I was there for the one during Afrotech, so I'm curious, like how you guys are expanding it, what's going to be different from the previous one, right?
Yeah, no, perfect. Yeah, so what we have is called Founders Financial Playbook. And so as you mentioned, the first time we launched that series was during Afrotech here in Houston, October 2025. The feedback was like phenomenal. A lot of people, showed up, and then people who signed up and wanted to show up actually weren't able to show up. And then people who wanted to show up, but we had already sold out all the seats, were hitting us and were like, hey, when are y'all having the next one? And so we took that feedback and was like, hey, we got to start doing this on a more consistent basis, because like people are looking for this knowledge, especially like in today's times, with just the way, if you had a corporate job, if you had all the degrees and white corporate jobs, like you're realizing like no job is safe right now. So a lot of people, they have their corporate job, but they're also getting into like entrepreneurship. And so, we're providing this, what we call Founders Financial Playbook, to basically give you some of the game we've been talking about already, about how you should get into business and really just think about how you want to operate and manage it on at least the business finance side, right? Mm-hmm. And so we're hosting part 2 of this Founders Financial Playbook this month, at the end of this month, on January 31st at the new, I guess it's like a co-working space called Edo Spaces right around the corner from here. So it's another space. It's a super dope space. We work out of there. That's our office. And so it's just a really dope space. They have a classroom for us to host everybody in the event. So, we're just encouraging anybody that's, thinking about starting a business, has a business, and just want to understand all the tactical parts of like running a business. That's what this Founders Financial Playbook is supposed to give them, is that some of those insights and takeaways to just kind of start your business on the right footing.
Okay.
Yeah, and we really break down different financial concepts in plain language. So we walk you through, what your cash flow means, what is burn rate, how to calculate your runway and things like that. So we really talk through different financial concepts, and including the growth trap, like what I was speaking about earlier, where you're scaling your business, but you're doing it unprofitably, so you're bleeding cash on a daily basis.
Yeah.
So we walk through all of those different things to where, these founders or these aspiring founders really have a sense of clarity around what's ahead of them as they go into entrepreneurship. And one of the things that we're adding to this workshop that we didn't have last time is that we're going to do a model or a demo of one of our financial models.
Really?
So we have actually, like I said, if a business can operationalize it, I can model it. And we have so many different pieces of models that we built. And we put together like this demo to really walk people through, what we can actually provide. So we're actually going to do a case study to where like we're going to walk through a different break-even analysis and show you all the different inputs that you can really contemplate as you're pricing out your products or whatever that may look like. So we're still tightening that up as to what exactly that's going to look like. But that's one of the things that we're adding this time that I think the people who are attending are going to get a lot of value out of.
Because that right there, that component, like a lot of times, like these type of conversations, they can be very like heady and like just so high level that you're like, okay, well, what's the takeaway? What's something tangible I can get from this type of, workshop or takeaway? And us introducing the case study and demoing the model shows them exactly what it is that we do at GreenArc.
Okay.
And so that additional component of the workshop is the one that I'm looking, forward to the most, because then it gets the audience engaged and like asking questions about maybe like their business and what they're thinking about, and we can show them like how that looks in the model. So
it's like $1 million worth of game. So
man,
for our audience, right? Where can I register at?
So we have a link. So if you go to our Instagram page at GreenArc Group is GRP. We have the link posted in our bio. And then we're also dropping, like every week, we're reminding people, hey, make sure you sign up for this event, because one is limited. So this is not like any and everybody can come. There's limited spots. And so if you don't get a spot, you're not getting in until the next one. And so I think top of the year, bro, like we just encouraging people, understand your business today so you know where to take it by the time we get to the end of the year. And so it's only a few spots. So we, like I said, you can go to our Instagram page to find the link and sign up.
And you can also go to the Posh app and just search for Financial
exactly,
Playbook.
Okay.
And you can sign up that way as well. So
all right, man. We're in with the game, and we finna get it. We finna get it from the two of y'all. I love that.
Exactly.
I love that. You guys are giving a lot of game right now. I'm talking about a lot of game. I'm talking, if anybody's watching this right now, they could probably start a business tomorrow, right? So you guys are natives of Houston. You guys have been around Houston. You guys have been outside in Houston. We've all decided to hang it up, do whatever. But I know you guys have seen the recent trends of like a lot of spots like closing down, right? Citing, even in the news, you got people that are going to the news channel talking about cash flow problems and they're not paying their employees, they're not doing this, they're not doing that. But on paper, like you kind of mentioned earlier, they might be looking like they're making $120,000 a night or $120,000 a weekend. But cash-wise, they don't have the money to kind of operate. Thus, they end up closing because they can't pay their vendors and things like that, right? So what do you think that if they had your guys' services would have made it different? Do you think that you guys could have been a what do you call that? The 8 magic ball telling them, hey, this is not a profitable way to do this? Or do you think that maybe it's just they weren't operating effectively, thus that's what led to their cash flow problem? But like, what are you guys' mindset now? Because I know you guys see that. You guys think like, dang, like they don't have money, but like if you're making $120K a night, like how can you? So like, what do you guys think about that?
I mean, that there's a lot of different reasons why a company could fail, but like I think when you look at the data, they say 4 out of 5 fail because of lack of financial leadership. And so you can be, I think, like I mentioned earlier, you can be revenue rich and cash poor. Revenue meaning you're sending out invoices and you're like, oh man, I got money coming in, but you really don't have any money coming in. Or you do have money coming in and you're not paying your vendors who you like need to pay to get stuff done, whether that's personnel, whether that's like your cost of goods sold, or whatever it takes for you to like operate the business. You're not a good steward of like the cash that you actually have. And so a very simple is like what we call a 13-week cash flow statement. And that basically, this is not revenues. This is like literally like understanding when your cash is coming into the business and when it's leaving the business. If you don't have an understanding of that, like you really don't have a business like to manage or operate. And so some of these businesses in town, like I've heard some of the stories about, you know, them not paying vendors or them owing vendors millions of dollars. And it's because they're not being good stewards of the cash because, you know, one, they don't have a team in place that really tells them what's a yes and what's a no as far as like how cash is going. And they just, a lot of businesses, bro, like they commingle like their business and personal. And like if you don't like
can't be buying Chococks a day after you made a
man, bro, like it's so you see these people get on the internet and they give you all this like game and tax advice and all this other stuff, bro, and it's just smoke and mirrors, to be honest. At the end of the day, like we're MBAs on our team. We have CPAs, we have tax accountants. Like we have real people that give you like real advice, not like some scammy like.
And you guys are a CFO providing a service that you guys have a team.
Yeah, and one thing that really adds to that is that we can be the CFOs providing you with recommendations and advice, but there is an operational aspect to cash management.
Exactly.
So when you're in that business, especially in the industry, you know, every hand that touches a dollar, it adds risk to the cash management aspect of it because there could be leaks of cash going out the door in so many different directions. So really putting a good operational model in place to where when a customer hands a dollar to whoever, tracking that dollar all the way through to where it makes its way to the safe, the vault, wherever.
Right.
Like being able to understand how all of that moves and how efficiently it moves. I think that operational aspect of cash management is, you know, the oversight that, you know, a lot of companies really just don't have.
Right.
So, you know, you see cash coming in and out, but it's kind of hard to see, okay, well, if this person pays for this drink, how that makes its way to the vault or to the bank.
To the bank.
Like, so
what's the end goal to the vault,
exactly.
right? Like if you bought this $10 drink, but like you still got to pay the person who gave you the drink. You got to pay the cost of good for the cup they went in. And so a lot of people don't understand that. They think a $20 drink at happy hour made them X amount of money, and they're not understanding that they still got to pay for it.
And some people may be like, oh, yeah, we made $120K in a night. We had a good night. When you don't know, hey, you probably had 30,000 walk out the door. So you just don't know. Like really having that operational, you know, stronghold on how the dollars are moving throughout your business, I think that is the key, like, missing piece for a lot of those businesses, and why they often tend to fail is because you're not really tracking dollar for dollar how it's coming in and where it's going out.
And simply put, they don't have system and processes. If you don't have system and processes in place to help you with that, it's like trying to herd cats. Like you're never going to be able to like understand what's really going on because you don't have the proper systems and processes in place.
And it's bigger than QuickBooks.
It's big. I mean, it's way bigger, bro. Like that. QuickBooks is like foundational. If you can get your data in there and have it in there in the right places, then that gives us the room to understand, like, foundationally where you really are at, and then, you know, provide that service that we provide. Like, okay, well, where are you trying to go? These are the different routes you can take to get there. But I think, back to your original question, most businesses fail because they lack proper systems and processes for their finances as well as, like, their operations.
Okay. So I got a question. Like, I've seen this tag before, right? Assets over liabilities. Like, what is that from? Like, I know it from somewhere, but what is that from?
Yeah, so this is merch that I bought from Earn Your Leisure. You know, they had a Black Friday sale not too long ago, so you know, I had to stock up on that. But
that's what it is.
The assets over liability is a formula for net worth. and it's also 2 sections in your balance sheet on your financial model. So
Yeah.
all of this kind of works together and really inspires us and what we do because I want to walk around representing finance and CFO work and what we do. So I think this really just speaks to me in a sense that we really help people increase their net worth, but it starts with the work that we do at GreenArc. So,
Okay.
So it's just a little motivation for me, and I've been a big fan of the guys over at Earn Your Leisure. So just wanted to show.
That's
some
a
love
shameless
and,
plug right there.
Yeah,
Shout out to Earn Your Leisure,
yeah.
man. Y'all inspiring. Cause I didn't even realize it at first, but I'm like, man, I've seen this before.
Yeah.
So that's what's up. All right, so this is the part that I love the most, right? We're gonna argue about it, right? So my question to you guys is, if I have $5,000, why should I pay y'all over paying a CPA first?
Well, I would say I'm pretty biased in this answer because this is like asking a barber if you need a haircut.
Okay.
But I'm going to say that paying a CFO over a CPA first, it gives you that high level overview and clarity and strategic direction that you need. And we can set the direction for how accounting should be done, how your modeling and forecasting should be done. And, just really, kind of take a top-down approach to how you're managing your finances in your business. Now, not to say that CPAs can't do it, but they are more so caught up in categorizing transactions when you're in a small business space. So that can be a piece to the puzzle, but it's not the overall puzzle.
Oh, they're not high level enough for it sounds like.
Yeah. I mean, of course, I'm gonna say you're gonna hire a CFO firm like ourselves because one, like, we provide that strategic level of insight. And typically, if we can understand if you need a CPA or a bookkeeper, like we have those connections to like guide you to them. A lot of times CPAs don't have connections to people like ourselves.
Okay.
So they can get asked like, hey, like, thanks for doing, my taxes, or thanks for doing my bookkeeping, but we want to make this investment into something for the business. Can you do that? And typically they'll say, like, no, we don't provide that service. But if you come to us and you say, hey, well, I want my taxes done, I want my bookkeeping done, we have those channel partnerships where we can say, we recommend this CPA for your bookkeeping, or we recommend this CPA for your taxes. So typically, because we have to always think strategically and like understand how to get certain jobs done, like we can funnel whichever direction you need to go to versus going to somebody who only does one thing and they may not have like the relationships to like, get you to where you're trying to go.
I'm sold. Sign me up tomorrow. So, Courtney, Hugh, thank you guys for coming on. Another great episode of Let's Argue About It. I appreciate you guys' insight today, man.
Yeah, we definitely appreciate you having us on.
I appreciate it.
Yeah.
Make sure you guys go check out the Playbook series coming this end of this month. The spots are limited.
January 31st.
At
2
Edo
p.m.
Spaces.
to 4 p.m. at Edo Spaces right here in downtown Houston.
Be there, be square. Also, shameless plug, shout out to Cool Dad. Y'all gonna hear me say this all the time. Thank you again, Kev. Love being a founding member of this place because we're able to have a space to create. If you guys are dope fathers out there looking to connect with other dope fathers, we are all fathers here. Be sure to tap in with me. You guys have my Instagram. You guys have all that. We're looking for more members all the time. We're looking for cool dads like yourself to give back to the community. All right, and with that, we out.